Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about the retail department store cards that are being offered. I ran across a news report that kind of makes it very clear that you might want to consider staying away from these cards. And if you have these cards right now, you probably would want to go ahead and pay them off. When you listen to this report, and then I'm going to come back with some commentary on it, you might want to steer clear of these offers that they have.
Deals come at you fast, often as you're checking out. Open a credit card and get 10% or 20% or even 30% off.
Stay away from these cards.
But those store brand credit card discounts come at a hefty price.
Because they're not as selective about credit quality, that's why the banks tell you that they charge such high interest rates.
But this year, those high rates are even higher.
We're talking extraordinarily high. I mean, this is generally about as high as they go.
A new Bankrate study of some of the country's biggest retailers found yearly interest rates as high as almost 36%.
All right, so let me talk about this for a second. This is something that I see with a lot of people who come to us for credit repairs, where they were in line, they were buying something from a department store or Home Depot or whatever. It's not just on one one big box store or clothing provider. This is something that's industry wide, and what they do is they make a promise. And this has been every time I go shopping at certain stores, they always say, "Well, you want to get a credit card," like Macy's or not. I'm not making a judgment on what they're on what they're doing. I don't want to get in any trouble on that. I'm just letting you know that from my personal opinion, it's not a good decision, regardless of what they're going to give you. Regardless, because this is what they're gambling on. They're gambling on that you're going to forget, or that you have other bills that you're paying on and you're just going to pay the minimum payment. And off of that minimum payment that you pay, they're going to make upwards of 36% on whatever you purchase. So you've just turned a $100 purchase into $130 some dollars or whatever. I'm pretty sure somebody will do the math for me. Don't feel like doing it right now, but you just turned a purchase that you've made into almost double, or almost double. And then if you go another month, you have actually doubled it. So let's just say, for example, you buy something for $100, you finance it with their department store card. They charge you 30 some percent, and you pay the minimum payment one month, and then you pay the minimum payment the next month. You've already paid double for that item that you had purchased, and with their quote unquote instant savings that they were going to offer. So that's their gimmick, and every business has the right to provide their product or service the way that they want to provide it. Now, when it comes to what I want to talk about, is that this is where I see a lot of people getting into trouble. And in one of my videos, I expressly stated this. I didn't get too many views on it. I don't know why. When I talk about repairing credit, the views go down. But I talked about where you don't get into bad credit overnight. You don't get into bad credit overnight. Stuff stacks up, and as it stacks up, all of a sudden you got a little payment going here, a little payment going there, a little payment going there, and then you got all of your household expenses that you got to pay. And then all of that stuff stacks up, and then all of a sudden you wake up one day and you're like, I don't make enough money to pay all of these bills that I have every month. That makes that word too much month. What is it? What is that old saying? Not enough money at the end of the month, or too much month with I don't know what it is, but basically the bottom line is you don't have enough money to make it to the end of the month. And that's how that happens. That's how it happened with me and my wife in the 90s, and that's how I see it happening with a whole bunch of people. And I see it happening, it's just like a a vicious cycle. So if you find yourself, number one, the first thing you got to do is you just turn down the offers. I get hit up with offers all the time. Mr. Williams, you could take this loan for $100,000. My American Express card, it's crazy what they offered me, and I just turned that stuff down. I'm not interested in going back to where I dug myself out of, which took me 5 years from 1994 to 1999. I'm not interested in going back there. No. So the first thing is you got to turn this stuff down. No matter how good it looks, you have to turn it down. The thing about it is hard to turn down because they use a psychological trick on you. And they've trained the cash register people to say it, even though these cash register people, they are not salespeople, but they give them the wording that they need to say. And it gets probably about 75% of the people will do and follow what they say because they make it very easy. All you got to do is push a button. So salesperson or the cashier says you want to save 40% right now. You can save 30 to 40% right now. And then you sign up for the credit. All you got to do is push a button. You're going to get probably approved. Because just like they said in the video from the news report, they're not looking for prime credit. And even if you have prime credit, they're going to still charge you a high interest rate. This is one of those situations where even if you got good credit, they're going to charge you a high interest rate because a lot of these debts don't get paid. A lot of them get sold to debt collectors. A lot of these. But they're gambling on that high interest rate to pay for some of the people who don't want to mess up their credit, which will be paying for the people who do end up not paying and messing up their credit. So the first thing you got to do is you got to make a decision. I'm not going to fall for these offers. I'm not going to go for the offers. That's decision number one. Decision number two, if you have some of these cards, you need to make a determination on what you're paying on interest, and you got to look at paying them off. I was just working with a client who's looking to buy a house, and the underwriting department specifically told them you need to pay these department store cards down if you want to get this mortgage. And then they came to me and they said, well, Steve, what should I do? I said, what did the underwriting department tell you to do? And I said, you need to do that. And they said, I need some help. I said, okay, well, this is what you need to do. Pay those down. Now, one good thing is that they didn't tell them they needed to pay them down to 30%, which was good. They just said, pay half of it down, which is why I always say, if you're looking at buying a house, get with the underwriting department because they'll usually tell you what you need to do. But they told my client, which we had helped repair their credit without disputing, and I'll tell you about that. Well, I have a video on how you do that, but we repaired their credit without disputing because you can't have, if you're going for a mortgage, you can't have any open disputes. So we repaired their credit, 3 collections without disputing, got them removed, and the department store cards ended up paying those down 50%, which I told them I think you should consider paying those off, and you can leave them open so it won't hurt your score. The creditor could choose to close them out at a later date. But they did that, and they on their way to buying a house. And the house is $1 million house. Very nice house. So step one, stop taking those offers because you're going to be baby stepping your way into a lot of payments that you may not be able to afford to make. That's how you end up being upside down too much month for the income that you have money coming in. Next thing is if you have them, you want to pay them down. Pick the smallest one, pay it down, don't use the card again. Next one, pay it down, don't use the card again. Use that step. If you've totally destroyed your credit already and they're charged off, then you're going to have to go through that process of seeing who's going to own the debt, and then you can, challenge them with responding to your court summons. Maybe you could get that case dismissed. We've seen that a lot of times when these debt collectors buy those debts. If the original creditor happens to come after you for that debt, then you need to still go through the same summons response process, could potentially win that case, and worst case scenario, you can end up settling that debt for less than you owe. That would be the process. But the overall, what I want you to get out of this video is don't fall for those cards. Don't fall for those cards. So I'm going to finish out the video here.
Yep, $30,000 into credit card debt. It's nauseating to say out loud.
Those high rates hit New Hampshire resident Meg Locker hard. She had almost $30,000 of credit card debt from around a dozen credit cards, many of them from big retail stores.
After 6 months of spending, you've spent more on interest than you have on any savings that you would have received from the store itself.
The retailers who raised rates the most this year include Big Lots, Old Navy, and Petco. And Big Lots had one of the highest overall at 36% a year. High interest rates are partly to blame, but according to CNBC's Gabrielle Fonrouge, as interest rates went down.
So instead of allowing that to impact their profit margin, they preemptively raised rates.
In a statement to NBC News, Big Lots said its interest rate increases are a result of several factors, including, quote, historical federal rate increases, rising credit losses, and regulatory pressures.
So let me speak a little bit about that. See, remember what I told you is that they charge these high interest rates regardless of how good your credit is. They are gambling on, number one, that you don't want to mess up your credit, so you're going to pay. Well, first, gamble number one is that you have either too many bills and where you're going to just pay the minimum, or you just pay the minimum. Maybe you make a lot of money, but you still pay the minimum. I got clients who make a lot of money, and I look at their credit reports, and I'm like, you're paying the minimum payment when you need to be paying this stuff down. So that's the two. They don't want you not to pay, but they've worked into their percentage rates with that annual percentage rate an amount that would allow them, in essence, the good people who pay to pay for people who don't pay. That's just worked into their business model. They have to do that, because if they were to just be passing these out and they're giving everybody a prime interest rate, it's not going to work out for them. They're going to end up going into bankruptcy. It's just not going to work for them. So that's the reasons why they're going to be having those high interest rates, and I had spoke about that earlier.
Experts say if you do sign up for a card because you really want that discount,
Pay that off the second you get it charged.
Priya Sridhar, NBC News.
Okay, another thing that I want to talk about that you need to be aware of, and they don't make this 100% clear. Some of these cards, if you pay them off the first month, not all, some. And remember, you're in line, so you're not going to be sitting there reading off terms and conditions and all of that stuff. Do you think that these people are going to just sit back and just be like, okay, you just get to take advantage and get the discount and not pay? Be wary of any type of additional terms of service agreement that states if you pay it off early, if you pay, say you get the first statement and you pay it off, that there's not some sort of fee that you're going to be charged. Maybe they charge you an annual fee for just having the card. Be very careful, because just like we say, these people are pros at making money. They're not in the business of losing money. And you're in line and you're going to be signing a terms and condition. And then all of a sudden you see that there's maybe, even if it's a small fee, $10 or $20. That's not what you thought you were signing up for, even if you expected to pay it off, when you got the bill. Be very careful. Also, if you are planning on getting the card and paying it off, you need to look at that statement to make sure when that statement date is going to be reported. Because some of the times you got to know when that due date is going to be due. Because that's one of the other tricks that they have, where it's like, oh, well, you got to have it in and it's got to be processed and everything by that due date. Not where we just have it in and it's getting ready to get processed. So my whole thing with this is be careful dealing, with anything you do financially. It's not just with this. Anything you do financially, let's get into the habit of reading through stuff. I don't like reading the stuff, but me and my wife, what we do is be like, did you read it? Did you bring your reading glasses? Like, we're just going to read through the stuff. That's what you got to do. All right. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process and my 2-phase settlement process. If you need your credit reports and scores, go to the website, the number 3scores.com. Links are below this video. If you have debt collectors coming after you early in the game, grab my 3-pack of letters, statute of limitations, debt validation, and cease and desist collection activities letter. If you have debt collectors suing you in court, there's a link below this video. Also, we can review your summons and help you. Thank you for your time. Subscribe to the channel, post your questions and comments, and like this video. This is Stephen A. Williams, president and founder of thecreditrepairshop.com.